Hi, my name is Alan from Alan Wee Property. Welcome back to my YouTube channel. In today's video, I'm going to talk about the softening rental market and how it will affect us both as an owner as well as an investor. Some of us will ignore the fact that the rental market has a minimum impact on the property market. Here you are wrong. The rental market is directly correlated with property prices. This is a segment that investors are looking at. I know homeowners don't bother with rentals since they are staying there themselves. But do you know what happened in the leasing market will have an immediate impact on you? Watch on as we go deeper into the details. Let me refer to this article in the Straits Times. The headline read, Condo rental market shift, landlord hit by high supply of newly completed units. As I read on, the surge in demand for rental units in the past 3 years was partially driven by pandemic-induced delays in the construction sector. The influx of foreign talent, international students, and an increasing number of Singaporeans seeking their own living space also heightened this trend. However, all these have gone on the reverse mode. Most construction delays have already been cleared. Owners are already moving into their BTO flats. HDB has already completed 20,000 flats across 22 BTO projects. Then in 2023, they completed 21,400 flats across 23 BTO projects. On the other hand, most private condos that were launched during the pandemic have also received their keys. Some of these projects include Treasure at Tampines, which has 2,200 units. Other like Forest Residence, Park Esta, Normanton Park, Park Clementes, Riverfront Residence, and Affinity at Serangoon had more than 1,000 units each. Then there are also plenty of small to mid-sized condos receiving their keys all across the island. Suppose you don't believe in me, let's watch this short video by M&D. In short, 15,000 homes are completed in 2021, 30,000 in 2022, and 40,000 in 2023. Please don't ask me in 2024, I don't know. But what I know is that close to 100,000 homes are to be completed from 2023 to 2025. 54,000 are HDB flats, and 42,000 are private condos. On employment number, we have seen some restructuring going on in the tech sector in the early part of this year. Then, we have also read news on Changi Business Park emptying out as global tech finance layoff take a toll. This is further exacerbated by the push to work from home since the pandemic, and the option to hire offshore staff to do the same work at a lower cost. Take very serious note on this. Here, what does this mean? More supply and lower demand will only lead to one outcome. Rent will go down. Okay lah, I thought no use. Let's take a look at some numbers. This is the historical trend for condo rental from May 2020 to May 2024. This will be a good 4 years. I will study them on a monthly basis as this will give us a clearer picture of the rental market. During the pandemic, we can see that rental remained relatively flat. Then it slowly started to increase with more Singaporeans returning home. We also have more foreign workers taking out employment and students returning for their studies. This led to a big spike. If I measure from the lowest point in June 2020, the average rate was only $3.10 per square feet per month. Then it hit the highest in February 2023 at $4.88 per square feet per month. This is a 57% increase in just 3 years. That is why landlords all feel very rich in the past few years. The rental can easily cover the mortgage repayment. This means their investment properties are running on attractive rental yields. Investing in properties has never been so attractive until now. If we look at the first few months of this year, we can see that the rental rate have started to taper off. Let's ignore the last 2 months first, as transactions have not been recorded fully yet. But we can see a decline in rental. This is also supported by data on the ground. Rental is very slow today. Most of my rental listings are going very slowly. Some don't even have calls. If they have, there are those that have unique attributes, or those that can accept different profiles of tenants. When rental yields start to drop, in reality, they are really dropping. Since rates have shot up by 50%, it makes sense for you to return to a more realistic level. If the rental rate is going to decline, this also means a higher interest rate environment. Investors will have to top up more in cash to cover their monthly mortgage. This is assuming they can find replacement tenant ASAP. But what if that tenant is nowhere to be found? The investor will have to cover the shortfall each month using their savings until a new tenancy is secured. This means the return is low, and he may even explore other investment asset class instead. After all, investors are always in pursuit of higher returns. Indirectly, this will lead to lower demand from investors. Since investors are traditionally looking at smaller units, if going forward, for the typical project launch, the take-up rate for small units is low. This could translate to weakening demand. Developers will have to take a hard look at their pricing and future land bids. For typical 3 and 4 bedrooms, they are mainly for owner-occupied. Hence, this segment can still lend some support to prices. But how much long can they support you? Remember, the smaller units are the real cash cow. That is why it will be interesting to see take-up rate for new homes in the coming months. Please don't look at the monthly headline. Look at quarterly numbers to have a better understanding of the market. Here, for those who report on monthly numbers, they should seriously look at my content to have more diversity. Back on property prices, in this chart, it shows the historical chart for all resale condos prices on a monthly basis. Property prices have increased in correlation to increasing rental yield during the same period. Going forward, what if rental yield begin to decline? Will it lead to lower property prices too? I think we are still early days as the softening of the rental only commenced in the early part of this year. If you have any comments, kindly share your views here with me. I assume some of you will ask me, Alan, what about the HDB rental market? You no worry, HDB rental market is always the bread and butter. It's always as solid as a rock. Close one eye, easily 5 to 7% yield. Most importantly, they have affordable, functional and practical living space. Most tenants don't need the swimming pool or condo facility anyway. They are here to work. That is why they just need bedrooms to sleep only. That is why, from the chart, we can see that rental rates have increased by 58% over the last 4 years. This is the same as per the condo segment. However, will HDB rental drop too? Yes, of course. But I think the impact will be less significant, as more tenants that used to rent in condos are moving to HDB. How I know? I do rental leh. How I don't know? On the ground, HDB flats are slower but are still moving. As long as the landlord remains flexible on the profile and requirement of the tenants, I think this market segment can still be supported. Going forward, what if you are a private landlord? What should you be doing if you have a hard time securing a rental? My humble suggestion, drop rental by 20 to 25%. Yes, you hear me correctly. This is what I advise my landlord. Otherwise, if you see there are another 5 listings advertised at the same rental rates, how on earth are you going to compete with them? Sorry ho, most tenants only look at prices. Secure tenant and move on for the next 24 months. This will buy you time on your cash flow and any exit strategy in the future. Another observation I realized is that many landlords are buying the same kind of properties in the hope of finding high-paying tenants. Let's say a 2-bedroom condo can fetch 4,000 per month. A 2-bedroom is typically for couple or small family. This means if your condo has 100 units, there are 2 bedrooms. You will be competing for that same profile tenant with another 49 landlords, assuming the other 50% are owner stay. However, if you have taken another approach to invest in a 3-bedroom condo that is older but bigger at the same price point, since this condo is really old, the kind of tenant wouldn't be those on employment passes or S-Pass kind. This type of properties will attract those on work permits. They will usually be friends or colleagues sharing the apartment together. Here I know many landlords are not in favor of such tenants. They always complain that they are dirty and the property has high wear and tear. But as you know, if your property is ready to chew it up, this doesn't make any significant difference. On this note, I find it double standard. We are served by them in the restaurants. They help us to clean our houses, to install our kitchen cabinets, and we often meet them in our workplace. Yet we avoid renting out our properties to them. Do you know, they can afford to pay high rental and finding such tenant is not difficult at all. Here, I humbly ask Singaporeans to consider them. We are always talking about inclusiveness, correct? Don't say I never share lobang with you. This is what I call the low-hanging fruits. They may not be appealing, but come rain or shine, there will always be high demand for such kind of tenants. This also applies to property investment and life. Don't need to find that most beautiful property or partners. Sometimes the ugliest one are the one that generate the highest return. For some beautiful ones, unfortunately, they are pretty to look at from the outside, but crappy inside. The decline in rental demands has pointed out two issues in particular. Firstly, are jobs being relocated or outsourced to other countries? Are Singaporeans losing their competitive edge? Should you go for upgrading and transfer right now? Or are you waiting for your boss to axe you with cheaper offshore labor? Go think about it if I talk sense here. For me, I've already fired my boss a long time ago. That is why I took ownership of my career. Secondly, the decline in rates is a normal progression. Don't need to be so kanchiong. However, if you are those that need the rental to cover your monthly mortgage, and now you need to top up every month, this could spell trouble for your finances. If you still have a job, this is still okay. If you lose your job, the first thing to let go will be your investment property. If many others are also doing it, this will indirectly spoil the market and prices will start to fall. This will be the beginning of a long downward slope of price correction, if any. For those who think I make sense and would like to cash out before the tsunami start to hit you, especially so if you do not have a stable job, maybe it's time to put up your property for sale and take cover. I'll be happy to assist you. That's all. Take care and see you in the next video.